Hey, good afternoon, everyone. It's Coach Chris coming at you on Saturday afternoon around 5 o'clock on Saturday, September 14th, 2024. Going to look at a top-down time frame analysis of the past week and possibly try and get an idea of what the market may do in the week ahead. Before I do that, I have a weekly chart on the screen right here of the MNQ NASDAQ 100 index micros. And I just wanted to show you last year at about the same time, we were down around a level of around 15,400 to 15,900. That's the week ending the 18th and the week ending the 11th. So that's approximately where we are. This week, we closed at 19,600, which is a 4,000 point increase, which represents about a 20% increase in value over that year, which pretty incredible if you ask me. Now, it wasn't straight up, but it's pretty close to that. What's interesting to me is this last week, what happened. Remember last week we had that big 1,000-some point drop, and we weren't sure if it was going to continue down, obviously, consolidate, or go up. Well, we got the answer. We went up almost within 100 points of last week's candle. So we ended up with this double bottom here and almost a double top. So we're right back where we were 2 weeks ago. Obviously, interest rates are the number one thing that the market is focusing on right now. And so any little bit of economic data really has been sending this market on kind of a wild ride. And I look for that to continue until the FOMC meeting, when we'll finally get an answer of what they're going to do. And then the market obviously has priced in, I think, around a quarter point increase. And so if they deviate from that quarter point increase, then we could see some big reaction. Also, in between now and the FOMC, the bigger economic releases will have an impact, because the way that the Fed works right now is they are really, really sensitive to inflation, and anything that could indicate inflation is higher or lower, they react to quite heavily. So it's really hard to read what's going to happen here because of the external influence on this market. So I think as we get into this more, rather than draw a hard and fast conclusion, I think we need to react to what the market does instead of trying to predict and have a bias of any sort of what's going to happen. Because to be honest with you, it's almost impossible to know. So we do have, let's just get this tool out and get a horizontal line tool out. We do have a swing low here, down around 17,300, which is almost 2,000 points below where we are. And then we have a swing high up here, which was set in July 8th, way up at 20,900, which is about 1,300 points higher than where we are now. The low was set on August 5th. We had that big downswing here of a couple nice big red candles in a row. So let's go down to the daily chart and see if that gives us any insight into any more insight into what's going on here. And this is what we do. We go from what's called a top-down analysis, because we start looking at the wider picture, and every time we drill down to the next price level, we get more details. And so you can see here, swing high and swing low. I didn't want that one. Let me just go with a trend line once. From here to here, you can see it a little bit better. We went up, back down, and now you can see here, even though so this was the weekly candle, You can see how we went down, and now they've retraced it. And so now you can see it in more detail. So big down move, rounded up move, and now it appears they're coming back up. Will they come all the way up to here? Or will this thing do kind of a swing down, end up here? Or will it pull back to this most recent swing low? Really hard to tell. I do like the fact, though, that the moves have been fairly controlled. They're not erratic like we saw back in here. You know, some of this very erratic movement. It's very nice. Here we had a little bit, but it's a real nice controlled move. Much easier to predict for market participants. Now, remember this week ahead, probably Monday or Tuesday, this contract is going to expire, the September contract, and we're going to move out to the December contract. And that can sometimes bring a lot of volatility as the institutions and big money makers are closing out. That they can't; these expire, and I think it's either on the 18th or 19th they expire. So most of these participants have to roll and purchase into the new contract, and so that can add volatility and obviously volume into the market. And that'll be interesting to see what that brings as well. So let's go down now to the 4 hour and see if it provides us with any more details. Not really. No, we lost the swing high and low. Let's just see if I come in. You can see where it was way back a month ago. And now you can see here, big candle down. Lot of consolidation, and now this slow move up, and we are now almost equal to the levels we had back at the beginning of the month. You can see there where we had that long area of consolidation in through here. Let's get out my from here to here. Just move this up a little bit. Apologize about that. And let's move it back here just to see when it started. Started way back here at mid-August. So almost a month it was in this kind of sideways range. And that was from here to here. About an 800 up and down area that it just kept oscillating in. Then we had that bigger drawdown back, what was it, about a week ago. Had that nice drawdown, and then now it's just steadily been coming right back up to where it was. So markets like to revisit, as we said many times, markets like to revisit areas they spent time in. They have to clean up any open orders or any unfinished auctions. So that's what they're doing. If just based on this, if I had to guess, I would think they'll probably get back up to this level, the high 900s, which is about 300 points up, and then we'll see what they do at that point. Once they get the FOMC news, are they going to be happy with it and send the market higher, or are they going to reject it and start to come back down? And like I said, we're not going to make any hard judgments. We're just going to observe, see what history has shown us, at least recent history. Now, as we drill down, you can see more of how the market consolidate, sweep the liquidity to the low, push up, consolidate, and we haven't had that next leg up yet. So we're just kind of sideways here. I don't know if we'll get much price action on Monday. We may. With this contract rollover, that'll be the big thing affecting the market Monday and Tuesday, or we may simply go sideways. Now, the next contract, the prices will be different. What happens with these contracts are the price starts out at a higher level because it's a complicated situation. Is what these futures contracts represent is the basic underlying NASDAQ equity market. And it's very important that you know how these work you should do some research onto why there's contract expiration and what it means, and why next week the value is going to be, I don't know what exactly it's going to be on the NASDAQ, but it will be a higher number. But it will be relative. It won't be like the market went up that much. It'll just all be relative coming into the new contract, and we'll just adjust our prices accordingly. It's not like the price actually increased by that percentage, because what'll happen is that's the interest that the underlying is paying on this contract. It's complicated, like I said, but if you do some research, you'll understand it. And as the contract gets nearer and nearer to expiration, that interest will deplete itself and will expire on the expiration date. So that's why there's a higher price. Let's just go down to the 30-minute now, see if it gives us any more insight. So far, it really hasn't. It's just kind of, yeah. Now, as you get deeper and deeper, you can just see this consolidation more clearly. You know, push down, consolidation, a few gyrations, then a movement back up. And then let's just go down to the 15 to finish it off. Not 15 seconds, 15 minutes. And then you can really see the consolidation there, even if I expand this out. This was a nice move here back on Wednesday. Came down in the morning, and at 9:30, that was that big move up. What was it? From 18.6 all the way up to 19.3. So like a 700 or an 800 point move, almost vertically. I mean, it was just incredible. Since then, we had a lot, and then we had a lot of consolidation, and then a move up to the 19,500 range, and then slowly consolidated up in that range. So we will see what happens, but don't have any preconceived notions. Let's just let the market dictate what we're going to do, how we're going to trade. I think we will get some nice price movement this week, and hopefully we'll be there to extract some of that money out of the market and put it into our brokerage account. So thanks for watching the video, and I will talk to you either tomorrow or Monday. Have a good weekend, everyone.